Do I look? Yeah. Good. Let's go. So, welcome. It's time to get our global macro on. Welcome to QuantBox Live. Oh, we got so much going on in our world. There's tons of data, lots and lots of data. It's just floating around through the air. Well, we need a way to be able to grab all this data, put it together, organize it, put it with pretty colors so we understand what it means. And what's the point of doing all that? So that we have the information we need to make informed trading and investing decisions. And because we know why we're making these decisions, we have data to back it up. We have the confidence to let our winners run. My name is Wayne McDonald. I'm a trader. I'm an economist. I'm a lover. I'm a hater. Cool. So let's go through the fundamentals that we have at QuantBox. If you're watching this on YouTube, you're watching it many hours delayed. In fact, half the time I don't even upload it to YouTube. I do it. It's a public service. Why don't you swing by? You get lots and lots of stuff. You get to take a trial for less than $8. But the thing is, do you want to trade with confidence? Yes or no? Okay. If you want to trade confidently, $80 is well worth the investment. Let me remind you that trading is risky, not appropriate for everyone. Oh, look, I have a QuantBox mug. Thank you, Jim. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. All right. This AI service is almost ready. This AI alert service is almost ready. That's the launch price. It's going up to $365. Very, very soon. Like, let's say, just say January 1st. When we hit January 1st, it's $365. There you go. So if you want it for 200, boom. So we have it. It works. One AI looks at all the data, and then it writes it all down in its own way, and then we have to use another one to actually write the actual text so it makes sense to you. And then we're at the point where I can email you, but we're still putting together the logic of what needs to be emailed and what needs to be sent via SMS text. So therefore, we're working on that. And so we're just got to split some things, put some rules in there. But at the very least, with the holidays getting away, but very soon, at least we can email you. And then we'll pull out the most important stuff and we'll put that on SMS. Yeah. So, dude, it's happening. I'm telling you, it's happening. But the other thing happening is the price is going to go up dramatically. Cool. You're welcome. Let's go. Boop, 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 boo. Boop, 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 boo. Boop, 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 boo. Boop, 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 boop. I'm on now. Euro still around 110. We had a risk off day. You can see we're still leaning there. Europe was down today. Japan gave back what it gained. It's actually as expected. Bitcoin is up as expected. Very cool. But the S&P 500 had a big down day yesterday. It's currently up. FYI. I think it's up about 0.5%. But the market's not open yet, so this is recording yesterday. Gold didn't do jack, even though the stock market dropped almost 2% in 2 hours. Gold did nothing. Told you, nobody's interested in that. Check this out, though. The yield, holy smokes. Some money went into the bond market. Yep. So now we're below 3.9. No way. That is so good. That's so cool. And oil had its little pullback, so we can check and see if there are any ops over there. Let's take a look at a higher time frame, and we lost. Remember, this was two. It was ever so slightly bullish on the long run, so we've lost that. Okay, VIX is neutral. We took one off for gold being elevated on the longer term. Yen got strong. We took one off for that because that's usually not good. Okay. And then risk off, risk off. Yeah. Risk off. Typically, you're looking at Swissy yen and dollar strength. Cool. So there is there is a change, is what I'm saying. So what's working, what ain't working? Pretty much flat, I would say, right? Oops, delete. I'd say pretty much flat. Then we got some outliers. NASDAQ is actually up right now. Bitcoin is up. So those things are risk on. But Dow is a bit down. S&P 500 is down. It's interesting. It's almost like rotation back, isn't it? We saw the opposite a couple of weeks ago, money coming out of NASDAQ and going into Dow. And now Dow and S&P 500. Okay, low beta, balanced beta, and all of a sudden high beta is actually performing. Okay. And Japan going through its turmoil. But generally speaking, most things look flat. These are outliers. Bitcoin doing its own thing. Cool. So I propose that fundamentally nothing has actually changed. So let's just look at things technically and see if technical analysis explains it beyond just trend trading. Let's go to, well, I guess we'll start here. Why not? Okay. Big down day yesterday. Yeah. How do we explain this? Well, 21 days ago, we said, using our tools said that this is the conservative target for the month, the conservative high for the month of December. We knew on the 1st of December. We said this is the conservative projected top for the month of December. And NASDAQ didn't get there. We only got to what we call, by definition, resistance. That's R1, first level of resistance. So I would propose, like, we were supposed to hit here and take profit. We were supposed to hit here and take profit. And, well, this is part of that rotation where normally NASDAQ goes higher than everybody else. It went the least high, but money had rotated into Dow a couple of weeks ago to catch the lower beta, which actually pushed it up, increasing its beta. I know. But it's the idea of what's normal and then what needs to get done now for year end, for Q1, for taxation reasons. Okay. But it's funny because I listened to CNBC yesterday afternoon and then last night, and then a mix of CNBC and Bloomberg, and then this morning, Bloomberg. And I must have heard 15 guests over all that listening, and nobody can say, well, we hit target. They all had a reason, and they were all different reasons. Well, it was Putin. No, it was Xi. Oh, it's the war in the Middle East. Like, gee whiz. They have no clue. Oh my gosh. I like to watch these shows. First of all, some of them are quite entertaining. But it gives you sort of like sentiment a little bit, sort of you know what's going on in the lexicon? But dude, these people, even people managing billions of dollars, have no clue what's going on. So never sort of worship up to the ivory tower like, oh, if you could only be as smart as them, then one day you will manage $1 billion. No, you just need to manage $1 billion and you'll be smarter than them. You're just $1 billion shy of being better. So, anyways, build the track record. They did something, right? Remember the rules. Like, how can an idiot manage $1 billion or more? They have to be 1% smarter than their clients. That's the only, right? That's the only thing. So, anyways, wowzer. Again, even in November, we had these lines all lined up. All right. So, anyways, so look, big drops. Okay, great. There's some recoveries. I don't know what's going to happen next, and that's the honest answer. There's higher highs above these, and of course, we haven't even hit the conservative target here. So we could go higher, or that is it. You're going to need a Santa Claus rally, which isn't this week. It's kind of like partially next week and the week after. If you know the proper definition. But look, if you were a bear, this is a sell zone. If you're going to be a bear today, look at these types of prices. Now, what I might do today is actually hedge. So I don't want to change the balance of my portfolio, but I might. So I added $7,000. I think it was yesterday or the day before. I can't remember. So the CIA met a while ago. We deployed all the capital. We deployed almost 10 grand, $9,500. I think we deployed. Great. So I'm not going to change that balance, but I might just take some money and then actually put on a short that makes money if the stock market declines, and then at some point remove it. So I'm not changing anything. I'm just adding some insurance because I overmanaged it when we had the Hamas attack on Israel. I overmanaged it and I changed the balance of the portfolio, and it actually cost me money. Like if I had just left it, now that may not have been the right decision either, because you're always facing risk. And if you see real risk, you have to do something about the risk. And doing nothing means you have no risk management. So I managed the risk I perceived, and I think it was real risk. So I don't regret doing it. But I was too slow to get back in because that November was crazy, right? So it cost me some opportunity. So I'm learning, that there are different ways to manage your risk. And I think what I want to do is leave the balance, but add a hedge. So you always got to have some cash laying around, right? So I popped in 7K just in case I need to do that. And so if I felt like today or tomorrow, this is the action. Okay. If something like this happens, uh, I can put on that hedge and ride it out until the technicals change. No, you just short the S&P 500, Jess. Just short the S&P 500. And you can do it non-leveraged or you can do it leveraged. So what I typically have done over the last few years is triple leverage short. So let's say you had a $30,000 account. Okay. So you got 30K in the S&P 500. Okay. You can cash out some of that and then put a 3x short. Or if you have cash, add the 3x short. Yeah. And so for a little bit of money, you might not let's say you only take 5 grand out. Okay. So now you got 25. Okay. But now you basically have 15 short, 25 long, 15 short. which is just more, a little bit more than 50% hedged to take off some of the pain. So if, let's say, the stock market drops 10%, okay, 10% down, you'll lose 4%. And the interesting thing uh, is that you also, if you hold it over rollover, you actually earn some interest, which is really strange. You're like, wait, what? Okay, so you're just trying to temper the pain. Right. I was watching an old period piece of, like, I don't know what it was. I can't remember, but let's say a movie about Scotland attacking, at war with England. Right. You can get the sense of the time of castles and knights, and there's always some guy that gets like an arrow in his shoulder and it doesn't kill him, but they gotta pull it out, but you can't just pull out an arrow because it's barbed, so now you gotta, like, stick a knife into the hole and jiggle the arrow out of his shoulder while he's alert, right? And then you gotta take the knife and put the blade in the fire so it's red hot, and then you gotta cauter the thing by sticking it back into the hole and cauterize, right? And then he's like, "But wait, give me some wine first." Yeah, that's a hedge. It's not a complete hedge. I'm sure you can still feel that, but can you imagine going through something like that? Oh my god. And they're like, "Oh, but give me some wine." I'm like, "Dude, I need a lot of wine if that pain's gonna go away." So, anyways, it's gonna diminish the pain. It's not a complete hedge. You're gonna feel the pain, but you're gonna feel less pain than if you did nothing. And also, there's this thing like that bugs me because most professionals out there do nothing, and yet they get paid to protect people's assets. And yet, when things go wrong, they do nothing. So it just bugs me. So if you see the threat, you need to address the threat. Whether you remove it or diminish it, you got to handle it. And so there's just sort of like, I don't know, financial ethics, like I have to do something if I see it there. Okay. So, anyways, so yeah, that's coming down. And I just want to point out that yesterday was a bad day. These are big drops. They happened in 2 hours. These are 4 hour candles. They actually happened in 2 hours. And lots of people, lots of experts on television that manage billions of dollars, they're gonna tell you what they think did it, and they don't know what they're talking about, and you need to not listen. None of them saw it coming, and you're like, I mean, we talked about it yesterday morning in the live stream, right? I'm like, this is where you take profit. This is where it could start, and I'm like, it could go higher to this level and that level, allowing Nasdaq to come higher, or the opposite. We've hit target, and they all start rolling over. I mean, like, it's just common sense and basic levels of knowledge. So when you hear people talk about other things of like, well, people have reaffirmed what the Fed is going to do, or they've changed their mind on what the Fed's going to do. I'm like, they're telling you they don't know. And I want you to see that vacuum of knowledge and say, oh my God, you know more than they do. Okay. I want you to go, okay, this is why I must make my own decisions because these guys don't know. They don't know. So now you have information at your fingertips through QuantBox. You have the right tools. You have better tools. Okay. You have better tools than many hedge funds. Now, most hedge funds and most money managers, they have Bloomberg terminals. Bloomberg terminals are a minimum $1,000 per month, minimum. And you got to buy the hardware. But anyways, it's $1,000 a month. QuantBox is 79. And it's just global macro focused. It's just what you need for trading and investing in commodities and currencies and indices. It's all global macro. Okay. Very quickly, we'll take a couple of look at a couple other things and we'll go. I'm just taking the temperature of the market. That's all I'm doing here. Okay. And you can see we've hit our target. Remember, I said 75. Okay. We were here, then we were here, and then I set this up and I said 75. And we hit 75, and now we might actually have a lower high setting up a lower low. Be careful. Okay. The logical trade has happened. Doesn't mean it needs to go higher. Just be careful. This is definitely a be careful day. I would guess that half the market is already out. Many people got out a couple of weeks ago. We saw it through rotation and rebalancing. I talked about it every day for a couple of weeks. Now, this is the last move. Now we're going into Christmas and we just hit the logical targets and people respected it. What did they do? Did they sell? No, they took profit. They went to cash. Apparently, they bought some bonds. This is all the good things. But they're going to the Caribbean now. You understand that? They're in their private jet. Okay. They're on some beautiful warm island where they speak French and champagne is being poured. Huh? Yeah. They're done. They're like, wow, what an amazing year, right? And so who's left now? Okay. The weak and the sick. We got to be careful. So there's dum-dums and there's degenerate gamblers. So we got to be careful. Some of these markets can move quickly. And like I said, you go to lunch and you come back 2 hours later and the stock market's down 2%. Okay. Like, whoa, what? Yeah. What? You think there's volatility? Look, it took 1, 2, 3, 4 days to get to that price, and it took 2 hours to erase it. This is the thin markets that I'm talking about. You got to be careful. Don't trade. So an amateur retail trader just trades the same all day, every day. Every day. Every day is the same as the last. But the thing is, it's not true. So we just lost a whole bunch of smart money, and now we're down to degenerate gamblers that made mistakes back in November and they didn't catch the move. And they're just a few percentage away from hitting their year-end bonus, which might be 300% of their salary. I mean, it's a big deal. They really need to hit that bonus. I'm not talking about a 5% bonus. I'm talking about a 300% bonus. Okay. So right? So it's the difference of making 300,000 or a million. In some cases, maybe 2 million, right? Like it really, really, really matters. These guys are going to gamble possibly other people's money so that they can get their personal reward. So be careful. This could be very up, very down, very fast. Okay. Cool. So I'll leave it at that. That's enough, I think, for today. That's enough. I'll see you at my other webinar at Investor Bootcamp. Well, at forex.today, and then at 4 o'clock we have our swing trading and day trading group meet. So yet another busy day. Yeah, yet another busy day. So peace on earth. May the pips be with you. May our profits be above average. Oh, and YouTubers, QuantBox.co.